So I wanted to share a little experience with you guys. So we're still on this journey to one day be able to acquire a beautiful vacation property in the state of Florida, the Sunshine State. And we continue to do our homework, we continue to do our research, and we're eager to purchase a property out there. But it's like the signs continue to not be in alignment for us. Now, first and foremost, we've been to Florida so many times in the last 12 months. It's ridiculous. And it's just gotten to a point where we're like, hey, it would make a lot of sense for us to be able to invest or purchase a piece of real estate that we can call home when we're in Florida, just because we spend so much time there. And, when you look at the number of properties that are on the market, compared to how many properties were on the market years ago, there's still an inventory shortage. There's not as much properties on the market as there once was. But here's the thing. The stars are not lining up for us. And I'm going to tell you guys exactly what we're running into. So first and foremost, we actually found a couple of properties that we like, but the numbers, they just don't make any sense. So this would actually be a second home for us, so to speak. And the plan was to basically put it on the market, VRBO, Verbo, Airbnb, what's another one? Vacasa, and ultimately rent this property out, short-term vacation rental during the time while we're not in there. Now, when I'm doing the numbers, and I don't know how many other people are looking at it like this, but when I'm doing the numbers, they just don't add up. And, maybe there's more for me to learn. Maybe there's something I'm overlooking. But when I'm looking at mortgage rates right now, first and foremost, for this particular type of property, there's actually a condominium in Florida. And in the type of condominium that we're looking at, you can't get a conventional loan or a conventional mortgage to acquire the financing needed to purchase this property because of the number of non-owner occupants that are in the building. So basically, I believe it's something like maybe 55% of the building is actually allocated to short-term rentals. So because of that, basically you just can't get a conventional loan to finance that deal. Now, that's part of it. But the solution to that is all you got to do is, get approved for a portfolio loan, and then you can make the deal happen. Well, I should say that's part of it, right? So, of course, Fed Chair Jerome Powell has been issuing a series of Fed interest rate hikes over the last 12 months. We're probably coming up on the anniversary of the first interest rate hike, which took place 2022, which kind of set off this whole cascade of inflation reduction activities. And this has also kind of like started this whole housing market slump. I'm not going to say we're in a housing market crash at all right now, but I am seeing the market being completely different. In fact, we bought a house, a year and a half ago. So we were in the middle of the chaos. And so we experienced buyers fighting one another just to get a bid in. Buyers were outbidding. There were bidding wars going on. Open houses were, 20, 30, 40, 50 potential buyers hitting the properties. I mean, it was just crazy. It was a crazy time. And now it is so unlike that. Anyway, so I'm looking at these properties, and I'm also looking at how much some of these properties have appreciated in a short period of time. And I'll be honest with you, the area we're looking at is it's really a vacation town. And one of the things that I consider when making investments in real estate is how strong is the economy? Why do people need to live here? And one of the things I'm seeing is that if you look at, let's just say from 2018 to today, what's that, 5 years? I'm looking at the population growth from that point till today. But I'm also looking at the population growth from other cities within the state of Florida. Now, some cities have seen anywhere from, 1% population growth over the last 2 years, and other cities have seen as much as 300% population growth in the last 3 years. Now, I went a little bit further to see how many of these real estate properties were second homes for people, and how many of these real estate properties were owner occupant primary residencies. And I'm starting to see a pattern here, and I'm really trying to make this work. I'm really trying to make this work, but things are just not looking good for Florida. And I'm not, for Florida real estate. And I'm not trying to talk anyone out of it, but I'm almost really just documenting my own personal experience so I can look back at this later on and reevaluate the thoughts that I was thinking at this point in time so I can hopefully make smarter decisions moving forward. Now, one of the things I'm looking at is how much is this property today to purchase? Number two, let's just assume you put 20% down on this property, maybe 25% down. Okay. Can the expected or anticipated amount of rent that would be collected from the short-term rental through Airbnb, Vacasa, Verbo, VRBO, will it cover the mortgage payment, or how much will I need to be continuously feeding this thing for the foreseeable future? Now, with interest rates on portfolio loans right now, I've seen as low as 5.99% from certain credit unions. I don't know if I've seen banks in particular offering 5.99%, but I do know of one particular credit union in Florida. You guys can hit me up if you guys want to know which one that is. But it was a 5.99% interest rate on this vacation property. But the problem is, and it's a portfolio loan, but the problem for me is that it's a 5-year ARM. So what that means is it would lock in that interest rate at 5.99% for the next 5 years. However, after that point, that interest rate, depending upon what the market's doing, that interest rate could start going up. And based on the terms, the interest rate could increase by as much as 2% per year up to a maximum of, I believe she said, 11 point something percent. So you could potentially have an 11% mortgage rate, sometime in sometime in the next 30 years. But after that 5-year period where your 5.99% interest rate's locked in. So something to be aware of, not something you need to worry about in the immediate future, but it's still something that you need to be aware of. I mean, let's just say that the Fed continues to raise interest rates, trying to get inflation under control, and before you know it, year 6 rolls around, and now your interest rates start shifting. And we've seen this back in 2008. We saw this back in 2008, and this is one of the primary drivers why so many homes got foreclosed on. Interest rates shifted. Many people had interest-only loans, adjustable rate mortgages, the ARM mortgages, and once the rates shifted, that changed the monthly mortgage payment drastically, and it got to a point where people could not afford the monthly payments on these properties. Now, here's something I hadn't even considered. I wonder how many people purchase properties in the Florida area as vacation homes and have adjustable rate mortgages and have yet to see their rates start to shift on them. Some adjustable rate mortgages only lock those rates in for, say, 3 years. So some are 5, some are 7. I've seen them all over the place. So if those interest rates shift and all of a sudden those mortgage rates start going up, that's going to create a lot of financial it's going to create liquidity issues for a lot of Americans who may not be able to handle that increase. Additionally, HOA fees are going up tremendously. In fact, I was watching a video for Michael Bordeaux just the other day, and he's covering Florida real estate quite a bit, and I find his content very informative, and he's actually been instrumental. Michael Bordeaux has been instrumental in helping me to put the pieces together in terms of whether or not investing in Florida real estate right now is actually a good idea. And I just, I hate to be a pessimist, but I just don't see the upside here. I'm seeing properties on Airbnb, VRBO in the vicinity that we're looking to invest in to purchase. I'm seeing these properties with a lot of vacancy in the future. I'm seeing some calendars are wide open, at least at the price point we're looking at. I'm seeing the properties that do have bookings, they're not getting the rents that I'd need to see in order to make these numbers work. And, that will be a problem for us. But it's also a problem for those who already own. And I believe Airbnb had come out recently indicating that they're already seeing softening in the market, and they're projecting that 2023 will be softer vacation related demand, or at least softer demand in their business. That translates to me. Now, of course, real estate it's local. So, some areas are going to have more, there may be more impact in certain parts of the country. Florida may be completely different from Colorado. Colorado may be completely different from Texas to New York to California. So it really depends. Nebraska, So just really, really depends. But at the end of the day, the amount of monthly expense is going to be so high going forward. You're going to have some people who have these adjustable rate mortgages. They're going to adjust, and they're going to start going up. So mortgages are going to start going up. Mortgage payments are going to start going up. Insurance. Many insurance companies are pulling out of Florida. And the ones that are staying, they're raising their rates, and they're actually demanding that some policyholders replace their roofs just to stay covered. Some policy owners will not be able to afford to do that, or may not even want to do that. So that's an added cost. So you got mortgage payments likely to go up soon due to interest rate hikes. And of course, if you've got an adjustable rate mortgage, that's going to increase your mortgage payment. 2, insurance rates are going up. Thank you, Hurricane Ian, as well as other natural disasters that have affected that. Not to mention roof replacement fraud and all sorts of craziness that's going on in Florida. Insurance companies were just taking a bath down there. In addition to that, Florida Governor Ron DeSantis has or is in the process of forcing flood insurance to be added to properties that are not necessarily in high-risk flood zones. So that's going to add more cost to homeowners in the Florida area. And as we go into 2023, as we go further into the year, we're hearing so many layoffs from companies like Google. Google recently laid off 13,000 employees. Microsoft laid off 10,000 employees. Amazon laid off like 18,000 employees so far. Shopify laid off employees. Redfin's laid off employees. I mean, there's so many different companies out here. I'm losing track of who's laying how many people off. But as we continue to go through this economic cycle, this will continuously increase the financial anxiety that a lot of people have, and this is going to affect the willingness for home buyers to want to purchase. And if home buyers are losing confidence because they're worried about their jobs, well, guess what? Homes are going to sit on the market even longer. And what I'm seeing a lot of these condos, and there's so many condos on the market right now. It's crazy. Now, again, I don't think we have an excess of inventory on the market. But when I look at the condos on the market and I'm checking the days on market, some of these numbers are really concerning. 100 days on the market, 200 days on the market, 300 plus days on market. Condos are sitting on the market for sale without going under contract, without being purchased. And so I'm seeing prices being slashed. I'm predicting that with these increases in holding costs, with these increases in carrying costs, there's going to be a number of people who are owning properties in these vacation destinations. These are not owner-occupant properties. Some of these owners are going to get to a point where they're like, hey, I'm tired of feeding this thing. Not everyone's going to be able to afford an extra $1,000, $2,000, $3,000, $5,000, $6,000 a month on top of where they live to feed into these rental properties, these vacation rental properties that are in Florida. And I just don't see the demand. I don't see the upside. Now, I also did some research looking at the number of, looking at the states. First I looked at the states that were being moved out of the most. And I forget the term, but basically you can see you can actually see which states people were moving out of the most. And I think New York and California were one of the top 2 on the list. But I think the top state where people were moving to was Florida. So there was a good period of time, a good 3 years, where people were moving to Florida because Florida was a very affordable place to live with beautiful weather, beaches. I mean, like, how do you cross the Florida state line and not just smile, right? Florida just makes me happy when I go there, right? But of course, all of that demand, Florida was one of the first states to open up during the pandemic. So, a lot of people were looking for a place to vacation. A lot of people were looking to get away from tough mandates and different policies and protocols that were implemented in certain states. And Florida was seen as the haven, the safe haven. So a lot of people moved to Florida. Well, some areas have seen growth of as much as 200 to 300% in their population over the last 3 years. And the thing is it's one thing to have an economy within the city, within whatever city you happen to live in Florida, where the economy is strong and there's good jobs there. There's a fairly above average wage being earned by the population, by the people who live there, by the residents of that particular city. However, when you have other cities in Florida that don't have the same type of economic strength, and the wages are not that high, and there's not as high of a concentration of owner occupants living there, that would mean that technically it's purely luxury. It's purely a vacation destination. So what I'm saying is when you have certain parts of the state of Florida where a high percentage of the properties are vacant, when you have a high percentage of the properties where they're not owner occupants, they're short-term renters, meaning they're driving in or they're flying in and they're hanging out there just for a short period of time. They're on vacation. I feel like these are the properties that are going to be most vulnerable. So if you take into account, you've got mortgage rates, you have mortgage payments going up, you've got HOA fees going up. Like I said, I've seen HOA fees increasing by as high as 300%. In fact, there is another mandate that's coming out that is increasing the reserves that HOAs are going to be forced to maintain. And I don't think that this actually comes out until the end of 2024, if I'm not mistaken. But most HOAs, they're expensive. They're getting more and more expensive, especially for condos. Some of the condos have managed to keep their HOA fees down, but one of the strategies that they've done to keep the HOA fees down is by keeping the reserves at either 0, 25, or maybe 50%. Now, reserves are basically the amount of money that the HOA collects to basically stash into an emergency fund for the HOA, for the condominium. And so what this reserve fund does is it covers any type of expenses that are outside of the anticipated budget. So you got your budget, you got your landscape, you've got your electricity bills, the insurance for the property, pool maintenance, the list goes on, right? So you have your known expenses, but then anything that's like unexpected, that gets pulled out of that reserve fund. So now I want to say it's like going into the end of 2024, HOAs are going to be forced to maintain 100% of their reserve fund. And so HOA fees in a nutshell are definitely going to be going up. So if we couple this with the recession that we're headed into and the reduced demand for travel, not a drastic demand, but a reduced demand for travel, families getting a little bit more and more financially tight and not willing to spend as much for vacations, I am anticipating that Airbnb, VRBO demand continues to go down. And if this happens in combination with the other costs associated with owning and holding these pieces of real estate in Florida, there's going to be more and more real estate investors and property owners that own these vacation rentals in the state of Florida that are going to say to themselves, hey, we're losing money every single month. And the bleeding could get really, really bad. The bleeding could get pretty excessive if the gap between the monthly expenses and the cost of ownership continues to get so out of whack, a lot of these property owners are going to be forced to say, hey, I can't keep putting $4,000 a month into this property that I don't even live in. I got to put it on the market. And so if we start seeing that, we could start seeing a tremendous amount of new properties hitting the market, and that will actually make it more and more of a buyer's market and ultimately likely drive prices down for real estate. Keep an eye on the days on the market. I'm seeing a lot of properties hitting the market, sitting on the market, days on the market, steadily counting. And I'm seeing more and more price reductions in the state of Florida, at least in the area that we're looking at. And so this is what I'm seeing. I'd love to hear what you guys are seeing. Times are changing. And here's another thing. A lot of people who bought these properties, they bought them for, it's funny, some parts of Florida, I've seen literally a 2 to 3 to even 400% increase in the prices of these properties compared to, say, 2018 and 2019. So that's a tremendous amount of appreciation for these assets. Now, what do you think people are doing when they see a tremendous amount of appreciation in these assets? Well, some people are deciding to flip the properties, but other people say, hey, let me hold on to the property. Let me refinance and do a refinance cash out, basically a cash out refinance, which allowed them to pull cash out of these properties. So some of these real estate investors and property owners may very well have pulled out several $100,000 per property out. And now they have an even higher mortgage payment because they've pulled cash out. Chances are they got a pretty good interest rate on it, though. But who knows what they did with the cash? Did they just blow that money? Did they invest in more properties? In fact, I've seen multiple properties for sale by the same person or by the same company. So it makes you wonder, what is the overall financial condition and what is the collective mindset of a lot of these property owners at this point in time? Because just imagine you have multiple properties in your name and all of these expenses are going up on you. And then because demand for these properties on Airbnb and VRBO is going down, maybe your property is sitting vacant more than you expected and you're not able to cover this property with that rent anymore. Or maybe you have to lower your price just to get renters in there. Now, if you're doing that, you're still losing money because you're not hitting your targets. Meanwhile, you're steadily putting money into this pit, and this could go on for the foreseeable future. Now, this remains to be seen. I'm going to continue to keep an eye on this market because, like I said, we still want to purchase. But right now, it just doesn't make any sense. But guys, drop me some comments down below. Let me know what you're thinking. This is what I'm seeing. Again, more and more of these properties are hitting the market. And I just don't see the catalyst that would cause these properties to be going up in value from here. I feel like there's a good 80% chance of downside on these prices going forward. And at best, about 20% upside. But let me know what you guys are thinking. Drop me some comments. Drop a like for the video if you made it this far. Also, subscribe to the channel, and I will see you guys on the next one. Be safe.